Friday. What's up, everybody? Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great day. We're going to do what we do. We take a look at our five major markets. We're going to look at our S&P, NASDAQ, crude oil, and gold, and then our stock of the day. So let's go ahead and roll on into it. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates so that we are... we're liked by the algorithms. That's always good when the YouTube algorithms likes us. All right, let's go ahead and get rolling. So starting first with the S&P, we are up about 3.5 points this morning, but we did have a little bit of a breakout of this range that we've been sitting in. So we broke through there in the overnight sessions. I mean, just in the last few minutes, frankly, we broke through that level. So if you're so inclined to be long, I think there's nothing wrong with getting long. Above here, I will say that we've not seen a big move on the breakout, but this is basing before the level, and that's typically what we look for a potential breakout setup for price to continue to run. Now, if we do get a pullback, your stop loss would be somewhere below 44.17, so it's a fairly tight little stop loss. There is also an opportunity to re-engage the big picture long right here at about 44.12. And that is on the 15-minute time period. So we have to put that to that purple color. Sliding over, taking a look at the NASDAQ. We see that the NASDAQ has already given us a bit of a breakout, starting to do a little bit more of a rollover. But I think that we might have a decent shot at anticipating a bounce off of this area, right? Old resistance oftentimes acts as new support. So let's keep that one in mind for a potential breakout. Now, this one's been trading down most of the overnight session, but I think you still have room for price to bounce off and continue to head higher. We did bounce off this little 15-minute level. And so as we've continued to put in higher swing lows, prices are retesting some of these areas. They've retested a couple of these levels. The next pullback, I think, back to this 15,130 could be a little bounce off of support for price to rally higher. Now, if it pulls back a little deeper than that, on the 15-minute chart, you don't have as clean of a level on here as you do in the S&P because of these long wicks, right? Long wicks are always going to be something that scares me away from looking at a particular area or level, but that's why I think there's a better chance that we'll just bounce off of this area of support. So moving over, let's take a quick look at crude oil. So crude oil, we had a pretty good level of demand that we anticipated a bounce off of. We got a good little move off of this demand. Now, this demand was this little wick over wick level, but the reason that we liked that level was because it was a prior area of resistance. Price bounced off of that zone. We've now come up to our areas of supply. Now, the bounce off of those areas of supply, let's take a look at our 15-minute level. We hit this one right here in the overnight, and then we've moved away. But after about 6 candles, price has done a whole lot of nothing. Now, for most people, I think you're probably not going to be awake to take this level anyway. But if you did, it didn't really do anything off the 6-candle rule. And anytime you see that 6-candle rule come into play, it's got to give you suspect to the next area of supply. So our next area of supply is this area right in here, which is a base drop below this pivot. However, here's my issue with this current level, and it still may be effective, but this is my risk tolerance, or my risk on this particular level. If you take the entry right here and your stop goes above here, it's got to go above the pivot, you've got a 1-to-1 reward to risk, and that's really where your opposing area of demand is. So I think this trade has got a 1-to-1 built in pretty easily, but I'm not so sure beyond that. And so that always makes me a bit more nervous and a bit more cautious. I will see a better argument to getting long actually right here at 69.50 since we're starting to show a little bit more bullish momentum. And then last but certainly not least is gold. Gold, we did bounce off of our hourly level. Got about a 2-to-1 move away from there yesterday, and then it just kind of sailed straight down through the next stopping point. So we have to look for our next area of supply. And our next area of supply, if you go down to the 15-minute chart, is really not There's really not a lot of great levels here. This one is probably the one that I would look at the most. It's a what I lovingly refer to as a noisy cricket, little wick over wick area here. Problem is, it's not a very strong time of the day. The time of the day is fairly weak, but I think that there is still an opportunity there for a potential short. If I look at this thing on the big picture, going to my 4-hour trend, I'm still fairly sideways, although I do have a lower low now and a lower high. So shorts are the name of the game at this particular moment. So those are our four markets. I think that the better bet is to continue to stay long in the equity markets. Let the equity markets continue to run higher. Crude oil looks like, yesterday could have been a bit of a short covering rally, or we could have come down to an area where prices are going to give us a decent little bounce. And so let's see really what happens in this range. And then gold is still kind of in its tight range. Let's take a real quick look at a stock of the day. And stock of the day I'm going to talk about today is Tesla. And the reason I'm taking a look at Tesla is because I looked at the daily chart and my eye was immediately drawn to this shape, right? We see a big rally up and then we see a bit of a pinch. And this is a very common bull pennant pattern. Typically, however, not always, typically these tend to break out back to the upside, and it's a measured move. And the measured move is 50% of the first trade. So if I take this distance right here, and I just put a 150% retracement, or extension, excuse me, and of course I drew it backwards. That would put us with a price target of right about 767. And that's right here at this area of resistance. So keep an eye on that one. If we break above the 725 region, I think you have a potential entry for price to move a bit higher. The way that I might consider trading that, utilizing our implied volatility, is that our implied volatility is pretty low. And so I think that it's just a bull call spread or even a straight call inside of Tesla. Now, Tesla might be a little expensive for a straight call for a lot of people. But if I just go into Tesla, and this is a fairly short time frame trade. Let's go out. We'll do 70 days. I think 70 is probably going to be better. If you do the 710 call, we could even do the 720 call. You've got a $58 price, but if you do a vertical spread, if you do the 720, you could do the 710 by 720. You've got a 485 debit in that one. The downside on that is we've got to have a delta of at least 0.25. So really, to make this make sense, you're probably going to want to have a much wider spread. And so I want to have a delta here of about, this is a 0.56. Let's do the 710 with a 0.56 delta by 800. That's actually going to be the better one. 710 by 800. That's going to give me my 25 delta. And that's a $90 spread with a $33 debit. So, you're close to just the cost of buying the call itself, but your risk is going to be trimmed down a little bit. Now, your stop loss on something like this would be at about 700. So right at about 700. So I think that actually might make for a decent little setup. Let me analyze this real quick. A couple of other positions on here I've got to move through. So that 710 by 800 call, if you put your stop at 700, and let's just look a couple of days in, you're risking about $337. And then your target on here, looking at your target being at 766. You've got a reward of about 11, looks like 1142. So you're risking around 350 to make around 1145. So roughly a 3-to-1 reward to risk ratio on this one, with where your stop loss would be and where your target would be. Although you could certainly do a couple of contracts, move your stop up to break even. There's ways to manage the trade to pull greater than a 3-to-1 out of this. But remember, I'm okay at a 2-to-1. But that would essentially be where I'm looking in this Tesla position. So hope you guys all got that. And if you didn't get it, then go to tradersarmy.com. We got a lot of information there on options, and we will certainly be here to help you out. So until Monday, everybody, have a great weekend. I'll see ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.